So I'm going to talk about the investment and finance, and this is a venture day, so I'm going to focus somewhat on that as well. But just let me set the stage a little about this topic, because we all probably seen $10,000 or a bundle of cash, and when it's freshly minted, it looks about like that. If you've seen Narcos, you have seen a pallet of dollar bills. We have the pallet is $100 million. The sofa is about $47 million. And this is probably one of the problems that Pablo Escobar had with the size of hiding away money. But if we take it one more step, you will see $1 trillion. And $1 trillion, that is the total amount of equities, stocks, traded every single day. That's the White House, by the way, from a different angle, and you can see now why it's called the West Wing, parts of it. And the equities are just one part of the financial market, $1 trillion. You have the bond markets, which are $2 trillion. And then you have the really big markets, which is the derivatives market. $20 trillion in the background here, we see the Statue of Liberty, and this is a fairly slow day. You have days with at least twice as much trading as this. And of that, for equities, about 80% of equity today is traded by computers. You have about half of bonds and about 70 to 80% of the derivatives. And this has really changed the financial markets in a huge way. And I pulled up an old article here from MIT Tech Review, which said that in 2000, Goldman Sachs had 600 traders doing equities. In 2017, they had 2 left. And that's 2017. And we see that gives some other people have to change careers, sometimes for better, sometimes for worse, but at least it's creating change. And 2017, that is really old age in this industry, or in machine learning and AI. Most people probably didn't hear about this even much back then. But since we're talking a little about most of you are probably not market makers or prop traders or in this as well. So I'm going to I'll jump over to venture, which is the topic of the day here. Because instead of chasing the microseconds, investors can leverage data science and machine learning to forward-looking decisions. Just before I jump over there, I'm just going to tell you a few cases that we are currently working on in Sudsyn or Antire now, as we are a part of, called Taylor AI in Antire, doing machine learning, doing this special things. We've been having commodities trading, been doing that since 2016, done totally autonomous with investor money since 2020, did 21% so far this year. So machine learning trading does work. We're doing this for power company, one of the larger power companies in Norway. We're going to do trading for them as well. We're building models, trying to do the intraday trading market. And we did this for a company in Britain last year that's trading electricity, and they are really printing money. And what has really brought us here? Well, if we take that was the wrong button. If we take a look, we have something called the Turing test. And the Turing test is something that's been like a holy grail of machine learning for at least 60 years. 2021, we were nowhere near reaching this. 2022, ChatGPT came and for all practical purposes beat the Turing test. But what makes it even more exciting is in a couple of years, you're going to have models that are smarter than the smartest person. In a couple of years after that, you're going to have models that are smarter than all of humanity combined. And how can you use this in venture? Well, at least you have to get onto the board, onto the game. And we have a few examples I just pulled up here. We have EQT is having there's a platform called something called MotherBrain to analyze about 50 million companies continuously. We have another company that are sourcing, looking for all kinds of internet presence and finding about 300 to 400 potential investment targets every week. And you have a third one here that generates all the investment or like a one-pager from due diligence reports and so forth. And as we were part of Antar now for about 3 weeks. Before that, we went through a long due diligence process, and I know that is time-consuming. And this is really going to help out in this kind of concepts. But these cases, okay, they're great, but pretty much it is filtering. So most of you probably have filtering, and you have ChatGPT that's going to be help and productive for your own personality, but as one of the speakers here yesterday said, that if you just save an hour, if you don't give that into the company, if you just take a longer coffee break, it's not really productivity. But there are also other ways of using this in this industry. We have an example for a huge private equity fund that continuously analyzes 17 billion web articles and messages, including social media, anonymous forums, even the dark web. I used to work for one of these portfolio companies for this company, and one of the early success stories in this, with this software was that they do have global restaurants. And this software or platform was able to pick up some disease in South America, and that was some poultry disease. And that was chicken that was used in restaurants all over the world. But they got a 3-day head start for that information. So they could put up a plan. They could come up with a continuously plan. They could mitigate this before it came in the large newspapers. So you have all these ways. You can use it to track portfolios. You can use it to track social media, all of this stuff. But you could also take it a few steps further. So if you go in just for looking forward, the presentation title was The Future In. So I picked out 4 topics that are really, really coming. You have something called AI augmented investment, which is pretty much you're using different tools. You can use it to get find relationships, you can find deals, you can evaluate risk, performance monitoring. I'm sure a lot of people are using this today, but there is also a lot more to go there. We have something where we're going to see leaner teams managing larger portfolios. And that's probably not very positive for the junior analysts, because a lot of their job is going to be done by AI, but you're also going to get productivity gains. You're going to get a bigger possibility to go deeper in with this help. We have something we call specialist AI advisors. I'm sure a couple of years ago, we all read that some company put in a chatbot or whatever into the board or investment committees and so forth. So far, that's just marketing stunts. I don't think it has helped very much, but by a couple of more years, you're going to actually have some serious help from some of this, and by trying to take away biases and validate decisions and being a completely different player in this game. And then, of course, you have the new sources for alpha. And conventional data, everything from satellite images to sensors to huge insight by leveraging massive data. And that is something we in Antar have been doing. We've been doing, for example, for finding investment opportunities within the hydrogen space for a bigger power company. We have been doing all these different kind of projects where we use all kinds of data to find interesting connections. And all this is very, very rosy, but there is a backside to this as well. You have a couple of risks. And hallucinations, that is a very, very known problem. That is, language models are coming up with stuff. And a lot of our projects these days are to create models or create boundaries for these models to make sure that the companies get the full use of models on their own data without the risk of hallucinations. A lot of times it's fine that it makes up stuff, but at other times where you really have to be able to trust this information, you cannot you cannot have models that do that. You have something called sycophancy, which is reinforcing biases. And that's kind of how the models are made. And that is how the models work. And pretty much that is, the model is going to get to know you, it's going to understand the question, and it's going to give you an answer that it thinks that you actually likes. So for those of you that are investors here or managers here, you're probably trying to not have too many yes people in your organization or in the leadership team. But here you're going to get some yes algorithms or yes chatbots that you also have to be careful for. We have oversimplification. Complex models can misinterpret information. Causalization versus casualization. That's very common in all kinds of settings for students, for everyone. And then obviously you get into kind of compliance risks if you're using this for finance and so forth. And also we can jump down to the US-centric bias, which also kicks in for the compliance. If you're trying to use ChatGPT to ask for some investment decision in Norway, it's a big chance that it's going to answer you based on how the US society works, so the US laws work and so forth. Because we can't deny it, the models are a lot better on US English than in Norwegian or Spanish or French or whatever. And that is also creating extra ways here. And then manipulated or biased data. Anyone that's been on the internet lately have seen that there's hugely biased data there. Most data is probably biased one way or another. And especially since we're talking about finance here, most, or I'm not going to say some percentage, but I'm sure there is a huge percentage of all finance information is how to get rich quick. So obviously these models are going to pick up that stuff as well, and it's going to be a lot less of the really good stuff that we can build the good models on, to say it that way. Of course, the models are good, but you have to be aware of all of this stuff. And then, of course, venture is about looking forward and seeing what trends are coming, what are going to come, what are going to happen in the future. So, you know, by using a model that maybe had a cutoff date in 2023, or even the data that's on the internet, it's a lot about data about what has happened, what about the history. But we really need to find the emerging trends, and that's a little tougher. And then, of course, bias towards certain investment strategies, like coming back to getting rich quick. And all of this is things that we as a company have been helping clients with, doing all kinds of, there are ways of doing the models. We have to build something outside. You have to build extra software or whatever ways of doing this, and to try to mitigate these problems depending on what your use case is. Maybe for customer support, it's not that big a deal if this thing comes up with some random stuff once in a while. But if you're a lawyer or if you are in financial investments, you don't want to risk this. So you have to approach this on a completely different way, and that's kind of our bread and butter these days. And lastly, just to say it, so we've all heard for several days here how fantastic these models are, and of course they are. But you know, models are their statistics, their math, their optimization, it's programming. They are coming with projections. They are predicting, but they cannot tell you with certainty. And that's also something we always, a lot of time, we tend to forget. And we'll be here around the entire guys. So if you have some questions, please just grab me. Thank you.